Oh, sorry, I didn't see you there. Welcome back. How many of you like stocks? Woo! I know I do. In fact, I think it's safe to say I've made economics my primary area of study at AU. Why else would I be hosting a college tech show? But I digress. And where Apple stock is concerned, many people are wondering what lies in the company's economic future. Is this the time to buy or sell? Do we invest in market flow or go with the capital dividend share prices? I have no idea what any of that means. In fact, I'm pretty sure I just made up all that crap. But I digress again. Let's focus on Apple stock. In 1997, after Steve Jobs insulted Dell Computer CEO Michael Dell, Dell said if he was in charge of Apple, Dell would shut it down and give shareholders their money back. 9 years later, Apple's market capitalization beat out Dell's. How prescient of Dell, Dell, I like saying Dell. If there's one thing Apple does well, it's corner markets, or rather create markets, as we talked about before in the show. The iPod completely revolutionized the music industry and made millions of people realize they needed to carry their music in their pocket. 2 years ago, nobody was saying, I need a tablet computer. And yet the iPad set off the shot heard around the world as every other tech company scrambled to design their own tablets. In 2009, iTunes was responsible for 25% of all songs purchased in the United States. And as of last December, Apple still reigns supreme ruler of US digital distribution with a 66.2% market share. Second highest, Amazon with only 13%. This year, the iPad and iPad 2 accounted for 89% of tablet internet use globally and up to 97% in the United States. Like most companies, the relative success of Apple's stock is based on a variety of economic factors. In September 2000, after the dot-com bubble burst, Apple stock plunged almost 60%. But in the past few years, we've seen Apple stock influenced by an entirely different beast altogether: the health and relative well-being of Steve Jobs. In October 2008, news broke that Steve Jobs had a heart attack. Which intrepid reporter broke this story? A random CNN reporter with the username John tAUk. Harmless enough, right? Not exactly. When the news got picked up all over the tech blogosphere, Apple stock price dropped below $100 per share. What was the story retold to the world by John tAUk? Here it is in full. Steve Jobs was rushed to the ER just a few hours ago after suffering a major heart attack. I have an insider who tells me that paramedics were called after Steve claimed to be suffering from severe chest pains and shortness of breath. My source has opted to remain anonymous, but he is quite reliable. I haven't seen anything about this anywhere else yet, and as of right now, I have no further information, so I thought this would be a good place to start. If anyone else has more information, please share it. That is my poor impression of a nerd. But yeah, real reliable. But this January, when Steve Jobs took a medical leave of absence, Apple stock immediately dropped 5%. Oh noes! And then it stabilized a few hours later, so there's that. Also in 2009, when Jobs took a leave of absence, the stock dropped 7%. A financial analyst from the ISI group is predicting that because of Apple's profit surplus, they're expected to do both a stock buyback and a shareholder dividend, returning approximately $15 billion to company shareholders. In order to gauge just how well Apple will do without Steve Jobs, a comparison was made with the Walt Disney Corporation after its beloved founder died. Walt Disney was arguably the Steve Jobs of his time. Disney was big on innovation and imagination, words I'm pretty sure Apple has used in a marketing campaign or two. After Walt Disney, the face of the company, died, within the next few days, Disney stock dropped 20%. Wait, I'm sorry, I got that backwards. It shot up 20%. In fact, we've reached a point where Steve Jobs' presence is no longer necessary for investors to have faith in the company. On September 9th, CBS's What's Trending accidentally tweeted that Steve Jobs was dead. The market didn't freak out that much this time. Obviously, it sent tech pundits into a tizzy, but Apple investors appear to be confident enough in the company to not immediately sell. I mean, there was some initial freaking out when Steve Jobs resigned, a 7% drop, but other than a temporary dip here and there, the company's doing fine. As of today, Apple stock is trading at roughly 400. In fact, it's been on a steady incline since early September, death rumors be damned. Now, for these many years, Apple stock has been more or less a variable dependent on Steve Jobs. Now, not so much. In the past few years, with Jobs at the helm, Apple stock rocketed. Skyrocketed, in fact. So if you brought Apple stock anytime like before 2005, you did pretty well for yourself overall. The question now becomes buy or sell. Is Tim Cook a good investment? Well, Tim Cook certainly thinks so. Apparently, because he's the new CEO of Apple, Tim Cook has now been awarded 1 million shares in the company. Yet, currently, those shares are in total worth about $383 million. He's getting half of those shares in 5 years and the rest in another 5 years. It's an incentive package to stay on board the Apple train. Cook keeps insisting Apple will never change. He said, quote, "Steve built a company and culture that is unlike any other in the world, and we are going to stay true to that. It is in our DNA." Aha! So that's how to do it. Steve Jobs created the culture, ergo any future investment in Apple is buying into the cult of Jobs. It's brilliant. So I'm recommending a buy for Apple, even though I don't understand how markets work. But then, who does? I kid, of course. Economists provide a very essential service or something. Anyway, that's it for me. I'm going back to my calculator here. When we come back, Douglas is going to have it out with one of our crew members over Final Cut Pro X. That shouldn't be divisive at all. We'll be right back. Stick around.